Now, we thought we had reached this a few months back when we ran into a shortage of silver. It lasted for about 60 days, and then silver loosened up, and now it's available again. Now, they didn't quite fail to meet, but they're behind. I just read in the International Forecaster the other day that some of these warehouses are in the process of delivering April demand. Well, that's 90 days ago. So what that tells us that a lot of warehouses, when you make demand, you want physical delivery, it may take 90 to 120 days for you to get physical delivery. Uh-oh. That sends a signal to us, hey, this isn't good. And that's because in times past, the ordinary delivery time is about a week or 10 days. So by the time you make demand on delivery, you should be getting it in about a week or 10 days. If it takes 90 days or 120, it tells you that there's something amiss here. Now, so far, nobody's panicked. I mean, everybody that's in the know, they want the physical paper. They're speculators. They're speculating on the various prices. They do not want physical delivery. They have confidence that there's plenty in the warehouse and everything is going to be fine. Now, there's an opportunity here because at some point in time, this delivery is going to break down, and when it breaks down, then there's going to be some massive realignments in the metals markets, which both of them, that is gold and silver, are heavily manipulated. These are not free markets. The stock market isn't free. The metals market isn't free. Free market means that the supply and demand determines the price. That doesn't have anything to do with the markets around the world today. It's the president's plunge protection team. It is the Federal Reserve. It's the central banks of the various countries around the world that prop up these markets or sell off into them. And they can control the prices of gold and silver. For instance, if you took a look at the supply and demand of gold today, based upon its historic prices in the past and inflation, at least here in the United States, the price of gold should be at about $2,200 an ounce. It isn't. It's about $930. Now, because it's priced below its supply-demand ratio, tells you very plainly that it's being manipulated. It's being manipulated by puts and shorts and calls and longs. These are terms that are used in the marketplace to describe people buying and selling various grades of paper. And it affects the price of the gold or the silver or the copper or the platinum or whatever you're dealing in. And these markets are being controlled for the profit of the big banks. Big banks. In fact, all of the silver in the world, 85% of it anyway, is controlled by 3 banks. So what the Hunt brothers attempted to do back in the early 1980s has now been accomplished by the big Wall Street firms. Now, that doesn't mean that we ought not to buy gold and silver because it's being manipulated. I'm sitting here waiting for the manipulation to come to an end, and that comes to an end when there's a big break in the market. That occurred in 1980. This big break in the market is when they're unable to make delivery and or people get wind of the fact that the paper money is no good, like the Weimar Republic in 1923 in Germany or any of the great inflations that have occurred throughout history. You know, when people lose confidence in their paper, then they turn to precious metals. And then there will be a big run on it. And then the price doesn't go up to where it ought to be, 2,200. It goes up to double that. It goes way beyond what it should be, and then it falls back to whatever the marketplace, really puts on it. That is the competitive marketplace. They call it the black market, but it's the free marketplace. Now, there's some profit to be made here, and we'll talk about that as we progress along. But in this History of Silver Part 3 by Jeff Nielsen, he says, for nearly 5,000 years, the price ratio between gold and silver has averaged about 15 to 1. This number is very close to the 17 to 1 ratio, which represents the natural occurrence of the two elements in the Earth's crust. And it's interesting to note, however, that through most of history the price ratio has favored silver. Now in the last century that ratio has rapidly, if unevenly, risen, and as of this moment the gold price ratio is once again nearing 70 to 1. Given the historical data, the natural assumption to make is that the world must be practically overflowing with silver for the price ratio to have gotten this skewed. In fact, this could not be further from the truth. In this modern era of silver production, annual mine production now amounts to more than 600 million ounces per year. However, while industrial and investment demand for silver are soaring, production is leveling off. Annual production in 2008 increased production by 2%, despite the price of silver reaching its highest level in nearly 30 years. Annual production is almost certain to decline this year. While the ratio varies year to year, roughly two-thirds of the silver that is mined is a byproduct of the mining for other metals, such as copper, lead, and zinc. Now, with these metals production dramatically reduced this year due to a temporary plunge in demand, it's virtually impossible for silver production to increase. Okay, so let's take a look at that and analyze it. If we take a look at gold, it also is a byproduct of copper and silver mining. But gold is also mined directly, particularly in South Africa, where they have a number of gold mines. And South Africa, for many years, has been the world's #1 producer of gold. It's no longer so. And gold production has been going down from 2,500 tons a year to about 2,000 tons a year. Silver production, two-thirds of it comes out of copper mines, such as down in Chile, when they're mining for copper to get the copper to make radiators for automobiles. Two-thirds of what silver is being mined every year comes as a byproduct. Now, when copper production declines because people aren't buying automobiles because there's a depression, then there's also a two-thirds lesser production of silver. So silver production is going down at the same time that silver consumption is going up. And the silver consumption going up has been going up, up, up every year for the last 50 or 75 years, at least since World War II. We won't say 75, but the last 50. Since the end of World War II, silver consumption has been going steadily up because of industrial demand. Now, it's not only a precious metal used for money, used for saving, but it's also an industrial metal, whereas gold is not. So only about a third of the silver production in the world comes from silver mines. That is, people that are actually mining for the express purpose of finding silver. And generally speaking, silver doesn't appear as nuggets like gold does in stream beds, placer gold, but rather it's an ore, and it comes out of the ground, and it's a pretty expensive process to produce it. There has to be something there. Now, up in northern Idaho, there's a mine up there, and they produce silver. It's a silver mine. It's open and closed, depending upon the price of silver, which goes up and goes down, goes up and down. And that's because it's manipulated. And the reason that gold and silver prices are manipulated so closely by government is because if the free market were allowed to function, then the price of gold would be $2,200 an ounce, which would be a glaring proof that the paper is valueless. So in order for governments to get you to accept their paper, they have to suppress the price of gold and silver to give you the illusion that it's a relic of the barbaric past and that it's not worth very much, and therefore we should stick with paper. So far it's worked very well. So you people just stick with your paper, that's fine by us. And we're sitting here stockpiling gold and silver as our savings. Instead of putting money in the bank in a 401k retirement program, people who are in the know concerning metals stock metals. And most people who stock metals take physical possession. That's 18% of us take physical possession and actually stock it. We've got buried in a hole in the ground or in a safe deposit box or someplace, you know, over at Aunt Martha's or someplace. And then the 82% that the speculators are speculating on, these aren't people that are saving for the future. They're just buying and selling contracts to make money, like buying pork bellies or wheat futures or anything else. They're just buying and selling and trading. And as long as they're buying, selling, and trading in paper, nobody ever gets wind of the fact that the physical stocks have been dwindling now since the end of World War II. That is, the physical silver is constantly going down, down, down. Although the amount of silver that's being bought, sold, and traded is going up, 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 and production is relatively stable at about 600 million ounces a year, and which is also being consumed.